What is going on with crypto assets? This is the NJCPA Issues Watch podcast. Welcome back to the NJCPA Issues Watch podcast. I'm your host, Stein Smith, and on my episodes of the Issues Watch podcast, I always try to cover anything and everything tech related, from blockchain to crypto to chatbots, RPA, automation, analytics. I always try to cover these topics and to also try to add some extra context as to how these tools are altering our jobs and tasks right now, and how they are going to upgrade us going forward. So I'm always happy to be here and always happy to be part of activities involving the NJCPA, bringing more eyeballs on these topics. And so, obviously, anything to do with blockchain, crypto assets, and how all of us have to actually handle these topics, both internally and externally, has been a hot topic pretty much ever since Bitcoin first burst out into the mainstream back during the back half of 2017. But and there obviously have been high profile collapses, meltdowns, blow-ups, and also product launches during the last 12 to 18 months. And so it's awfully tough to try to get a good objective handle as to, one, how this industry, how this area has evolved and is evolving, two, how to keep pace, or actually what to keep pace with, and then also how to actually talk to clients, right? Either external clients or internal colleagues, on items that are directly or indirectly linked to blockchain and or crypto assets. And so off the top, after a arduous process of trying to get accounting rule makers to actually talk about crypto in a constructive, productive, and I'd say serious manner, the FASB is in the process, as we speak, of trying to get comments, trying to get feedback on their proposed accounting standard rule, which as it currently stands, will actually be the first crypto-specific accounting guidance issued out of the FASB. And so the main sort of purpose of this rule, as it has been put forward, is to, one, clarify how certain crypto assets are to be treated on the balance sheets and on the income statements of institutions who are holding them or are conducting transactions with them. And ultimately, that big change is that going forward, and the actual period for public comment closes in early June of 2023. And so, assuming there aren't any massive alterations to the rule as it's currently written, the underlying change is that going forward, institutions who either hold certain crypto assets on their books or have certain crypto assets being used for transactional purposes, either by them or by external customers, will going forward have the ability to actually mark to market, as opposed to right now, every single crypto asset, token, NFT, all the rest has to be held at cost less any impairment, which obviously is not accurate, and it also creates a outcome where everybody knows that the current GAAP rules are not accurate and are not communicating the economic realities to anybody. And so having this updated rule come out to the marketplace, I think, is a good, albeit sort of narrow, step forward. And so the updated guidance out of the FASB will really only apply to Bitcoin and to Ether, which are the two biggest crypto assets on their own in the marketplace. But it's important to note here that in this rule coming out of the FASB, they are not covering NFTs. They aren't talking on DeFi. They aren't talking to crypto staking or any privately issued stablecoins. So the updated guidance is again a excellent first iteration, but it's only tackling really a quite narrow part of the broader crypto accounting conversation. But it's absolutely a update and a change that anybody and everybody from audit, tax, advisory who has either external clients or currently works at a firm who holds crypto or is actually using crypto as a medium of doing business has to be on top of. And so, to add in some extra hot sauce, right? As if the IRS hadn't caused headaches and heartburn and agita linked to how to tax, how to treat, how to classify crypto transactions. Now there is this, and I guess the correct word is a proposed change or update as to how the IRS will, going forward, classify, treat, and tax NFTs, non-fungible tokens. Now, to add some extra background there, NFTs have been talked about, mocked, joked about quite a bit, but ultimately, all that a NFT is it's a cryptographic instrument that allows the holder of that NFT, of that instrument, to have control over either a virtual asset or virtual piece of information, or control over some real tangible asset or some tangible piece of information. And so the commonly talked about applications of NFTs happen to be focused around artwork, people, and all the rest. But actually, that whole area of NFTs is actually quite narrow. And yeah, as you analyze NFTs, talk about NFTs, really talk to people who are in the space, it's quite quickly becomes obvious that NFTs have a whole range of applications, right? For healthcare records, educational records, real estate records, transactions, basically any transaction involving a individual and some external data. And real estate, healthcare, education are the three major buckets that I hear the most about. And so it really becomes obvious that even though most of the focus has been on how to value NFTs and how to treat NFTs, that there are going to be more NFTs coming out to the marketplace that are not always going to be traded for high valuations or be actively talked about every day. But every transaction involving any type of crypto asset does create a income tax obligation, both on the reporting side and oftentimes on the income tax payment side. So even as NFTs become more connected to non-trading activities, there is still that income tax angle, which going forward, if the NFT is classified as a collectible instrument, then any income or earnings created by that NFT and then associated to the NFT holder during that current tax year are taxed at the higher rate of 28%. Okay. So, we have some changes coming out, FASB updates coming out of the IRS yet again, but there's a lot of commentary, conversation, or arguments rather, going on in the sort of political space, economic space about crypto, right? And there's a ton of headlines out there that are bad, and there are also some headlines out there that are quite positive. And so just a few of the trends and a few of the headlines that I've heard quite a bit about, and that probably you will if you have any external clients or internal colleagues interested in this space. So anything coming out of the SEC under Gary Gensler has been pointedly, I would say, at least anti-crypto, and that he and the SEC under him have argued that every single coin, token, NFT out there is the equivalent of an equity instrument on the one hand, but they have not published any criteria to help issuers of these coins and tokens avoid being sort of all lumped in into that one asset class. So it has become very difficult for issuers to try to work with the SEC, and so ultimately, any external client that is interested in either creating their own NFTs, minting tokens, and actually doing so at a large level, you are going to want to have those conversations with them that under current SEC guidance and commentary, all of those instruments are treated as the equivalent of an equity instrument. And then, obviously, there is this ongoing or recurring conversation about if you have a client or a business or an entrepreneur that is trying to use crypto as a medium of doing business, which, don't forget, was the whole point of Bitcoin in the first place. But there is this connotation that any entrepreneur or enterprise that is trying to use crypto is doing so for unethical reasons or illegal reasons. That, I believe, is a topic and a comment that is overblown, and it's out of date. But it is also something to always keep in mind, right? For any clients, whether it's from a entrepreneurial point of view, or you have higher net worth clients that are trying to allocate capital into crypto to help sort of round out their investment portfolio, items of that nature are going to come up. And then overall, right, where do we go, right, from here with crypto, right? Because after the all-time highs were hit in April of 2021, it has been kind of choppy since then, right? And having the collapse of FTX, which also caused chaos in the overall crypto space, and actually directly impacted audit firms who were trying to offer services in this space. So in the aftermath of all of that, right, the FTX collapse, Binance is being sued right now. Coinbase, the only U.S. publicly tradable crypto entity, is in the process of possibly being sued by the SEC. How do you actually talk to clients? And how do you talk to clients? How do you talk to customers? How do you talk to your internal colleagues who have questions about crypto? Right. And ultimately, I've been on this path, right, both here at the NJCPA and elsewhere. I've been talking about crypto, banging on the table about it, probably since about the back half of 2016. And so, there are always a handful of areas that I always try to focus on, right? During any conversation, be it a conversation like I'm having right here, or in person, conference presentation, corporate trainings, right? One, why is the entity, be it you or a external client, why is the entity even considering using crypto, getting into crypto, or issuing their own token, right? Are there underlying economics? Are there underlying business reasons why, right? Then if there are, great. But if there aren't, or the actual connections aren't clear, I would probably hit the pause button and try to really get some clarity as to, as to why the entity is even talking about doing this. One. Two is, okay, so after hammering out sort of the why, right? What type of crypto asset is actually going to be talked about and be implemented at the firm? Are we going to use crypto as a medium of doing business for payments, for payroll, and other items like that? Or conversely, is the firm in question only going to hold crypto on their balance sheet to help sort of add some more breadth and depth to their investment assets? And then three. Now I cannot emphasize point number three enough. How is this cryptographic, crypto asset, cryptocurrency information actually going to be held at the company? Right? Either a hot wallet, app-based wallet to access crypto holdings, either from a phone, tablet, computer. Easy to use, convenient to use, but also has been implicated in virtually every single hack, breach, or otherwise bad incident linked to companies that have crypto. So option one, hot wallet, easy to use, intuitive, convenient, but also easy to hack. Or a offline cold wallet solution, which are much harder to hack, not impossible to hack, and then also having that information, all that private key data really stored in that offline cold wallet is also going to make it harder to access it on a on-demand basis. So it's hot wallet is the ease of convenience and access. Cold wallet is much harder to hack and to breach. Okay, and then points 4 and let's say 5 here, right? 1, does the entity, does the institution, does the actual firm in question understand how integrating crypto assets into their operations, either on their balance sheet or as a payroll option? Is the impact of that change understood from a IT point of view, from a control point of view, from a governance point of view? Are those options and are those changes rather understood? And then 5, has the firm talked to its customers, suppliers, auditors? Has the firm been proactive in engaging the other people and firms in its network, supply chain, ecosystem? Have they been proactive in having those conversations as to how they're going to implement it, when they're going to implement it, and then how that will alter their internal operations and how they have to interact externally? And so, as always, right, any update that has to do with anything blockchain related, crypto related, I could be out of date tomorrow, but I always try to sort of give some updates on some of the rules that are coming out finally, and a few of the headlines out there, right? And to wrap up my sort of compressed update here, I would say that going forward, Bitcoin has been trading at a pretty flat range for the last half year or so, between I'd say $22,000 and $28,000 per coin. Now it has briefly popped over that level, and it has dropped briefly under that level, but that it has been trading in the $22,000 to $28,000 range. I would say overall, just personally here, not investment advice, nor the view of the NJCPA or my employer. I think that the trend for Bitcoin is to go higher, not overnight, not tomorrow, but overall higher, due to macro forces and the continued adoption of crypto, but I would say really Bitcoin as a institutional entry point into crypto assets. So one, two, are that stable coins are probably gonna I would say be the priority for any further accounting codifications or any laws coming out of the U.S. Congress around crypto. But in terms of the actual timing on that, I don't see too much happening within like the next 6 months or so. But I would say that in terms of rules, both out of the U.S. Congress or any further updates out of the FASB or the IRS are going to focus around privately issued stablecoins. And then three, there are going to be more people, more entrepreneurs and firms using crypto, being paid in crypto, because it is easier and easier every single day to buy crypto, to use crypto, to create crypto, and to have all kinds of other income streams created as a direct or indirect result of owning crypto assets. So it's going to be a hot topic for sure. There are still a ton of areas that are a bit ambiguous and quite murky, but I would say that I am cautiously optimistic, right? That as we're getting more clarity out of the FASB, out of the IRS, kind of sort of, and there are more people in the U.S. Congress who are trying to get clarity in the space. Now, obviously, politics always improves everything, but I would say that I'm cautiously optimistic that there's going to be more clarity and transparency as to how these instruments are going to be treated going forward, and having that clarity helps us help our clients better. But I would say that in terms of the back half of 2023, watch for Bitcoin price action. NFTs are definitely coming back, just not in the exact same way. Privately issued stablecoins are going to be on the hot seat. Audit work and attestation work is 100% on the hot seat going forward, and that overall the adoption rate of Bitcoin and other crypto assets is only going to increase. And for any of you who have tuned into this episode and our past episodes, or have ever talked to me, if you aren't part of the emerging tech interest group yet, I please encourage you to go sign up at njcpa.org/groups. It is a great group focusing on everything tech related, and all episodes of the NJCPA IssuesWatch podcast are online at njcpa.org/podcast. Have a great day.